wanted to thank Needham Bank for sponsoring our Small Business Seminar series, and welcome a number of folks here from different chambers, including the Waltham Chamber, the Reading Chamber, the Stoneham Chamber, the Melrose Chamber, the Brookline Chamber, and the Wilmington Tewksbury Chamber. We're delighted to have all of you here and appreciative of your time today. I wanted to thank Ili Spahiu for joining us. Eli, good morning. Eli is no stranger to us. We've had a number of presentations that Eli did for us, hosted for us over back in 2020, and we're really grateful for all that. And Eli, I just want to say, while we've all rolled our eyes and had our moments of exasperation regarding the SBA and the ever-changing rules, we are so grateful to you and your colleagues. We know that all these changes and things are not within your control, and we're so appreciative of the professionalism of you and your colleagues in helping so many of us get through this time. So Eli, thank you very much. I understand we have about an hour for a presentation, maybe a half hour for some questions, and we'll let you get right into it.
Greg, appreciate the opportunity once again, and moreover, the partnership that we have with the Chamber. The SBA would not have been able to provide the assistance to the small businesses without the help of our partners, such as yourself, the various chambers of commerce throughout the Commonwealth, our resource partners, our lending partners, most importantly, who made, between the first two rounds of funding, $525 billion available to small businesses across the nation. Here in Massachusetts, folks know we were fortunate. We've got our fair share of funding for the first two rounds. Combined, we've got about $14 billion for over 118,000 small businesses across the Commonwealth. So with this new appropriation of funding, we are hoping, again, only through the partnerships we've got, with our lending community, with our various, partners, chambers, business associations, to spread the word, to make all of you aware of the funding available, the programs available we have. And this session today is designed to basically inform you of the latest and greatest we've got. In the past couple of weeks, since January 6th, and the passage of the Consolidated Appropriations Act, we have received, over 500 pages of new guidance, new information with regards to, the Paycheck Protection Program, the various aspects of the Economic Aid Act. And this presentation is designed to give you a full update, a comprehensive update on what's available. We're going to dive into the details of many of these programs, particularly the Paycheck Protection Program. I do have a wonderful disclosure here, which is from our legal team. I'm sure you can all read it. I'm not going to read it for you all, but this information is accurate as of the 20th. And obviously, it's no substitute for the published guidance we have, specifically the legislation, which is the source of all this information. So for you all, just as a reminder, we've got the CARES Act that was approved back on March 27th of 2020. We've got the Flexibility Act, the Paycheck Protection Flexibility Act of June of 2020, and most recently, the Economic Aid Act of December 27th of 2020. So what does the Consolidated Appropriations Act have in store for us? First and foremost, which is, probably in the minds of everyone, is the Paycheck Protection Loan Program. So almost $285 billion of new funding for first draw and second draw PPP loans. I'm going to make that clear. We're going to be talking about first draw and second draw PPP loans a lot on this, program. So first draw loans would be loans to borrowers who did not apply in the first two rounds or were not eligible in the first two rounds of funding in spring and summer of 2020. Second draw loans would be loans that are to those eligible businesses that did receive a first draw PPP loan and are eligible, meet the criteria to receive a second draw PPP loan, okay? There's a couple of differences, and we're gonna be talking about that in further details, later in the program. But we've got a brand new grant program under this Economic Aid Act. I've got a couple of slides on this. Not a whole lot of details yet because the program has not been rolled out yet. But this is for our shuttered live venues, the theaters, the museums, the zoos. $15 billion. Again, it's a lot of money. That's across the nation, of course. But these are our hardest hit, industries, and we're glad that Congress made this programs available, for us to help this small businesses as well. In addition, we're going to be talking about the EDIL Advance Program. So the Economic Injury Disaster Loan Program is a program that's available through the SBA Direct. Okay, no lenders are involved. Borrowers could apply for an EIDL loan on our website, and the EIDL Advance is a grant program. Okay, so over spring and summer, we had an appropriation, two rounds of 10 billion, so 20 billion in total. We received an additional 20 billion for the program. So I'll share some updates on that as well. For many of you, the debt relief program, it says 7A debt relief here. That's not accurate. Unfortunately, across the 7A, the debt relief program is available for all SBA loans. That includes 504, 7A, and microloans that are on the books. So we got additional funding on that. It's half of the funding we were able to provide last year for our small businesses who have a current SBA loan on the books. So in addition, our traditional lending programs received a $2 billion enhancement. Obviously, I'm going to touch on that, but that's information that's going to be available to you through your lenders and banks and credit unions that you bank with. As far as funding options, again, the PPP loan program, I've got quite a few slides on that. We're going to take a deep dive on the specifics in just a little bit. The EDIL program that I mentioned, again, that's another funding option available to you all. It is available, unlike the Paycheck Protection Program that has a second draw. Unlike it, the EDIL program is, although the deadline was extended to December 31st of 2021, does not allow for a second bite at the apple. Okay, so only businesses that did not apply or did not receive an EDIL loan will be eligible to apply for another EDIL loan through the SBA. Okay, but this is a program that's directly through the SBA. No lenders are needed for the EDIL program. So that stands for the Economic Injury Disaster Loan. Moreover, our 7A, our 504, our microloan programs are getting quite a few enhancements, and I'll touch on that. In addition, we received funding for the debt relief program again. So that extends payments, principal and interest payments for a new and existing SBA loans. So I've got a slide on that as well. Now, just so you know it, as Greg mentioned, we're going to cover this information in probably about an hour, and hopefully we'll have at least a half an hour for questions. But keep in mind, you use the Q&A feature here on the Zoom platform to type in any questions, and Greg and Tiffany will we'll make sure that we go over those, starting from the most recent going all the way down to as many questions as we can cover. Now, this is no news to you. The SBA was a little methodical this time around with this round of funding. What we were able to do is provide funding to those entities that did not have full access the last time around, the last two rounds of funding. So obviously, to ensure increased access for minority, underserved, veteran, women-owned businesses, we made the program available starting on January 11th and January 13th for second draw PPP loans through our community financial institutions. So obviously, we reopened the program, to small lenders with less than $1 billion in assets on Friday the 15th, so a week ago. And as of Tuesday, the 19th of January, the program is open to all participating lenders. So any business can go to any lender for a second draw PPP loan, okay? You do not need to go to the lender of record, but obviously there are some benefits in doing that because your lender of record for the first draw PPP loan has a lot of information on file from the first two rounds of funding. So a little bit about the shuttered venue operator grant program. So I mentioned $15 billion. Of this money, $2 billion is a set aside for small employers. So those venues with less than 50 full-time employees. Okay. There's, obviously you've got theatrical producers here. It's pretty self-explanatory. Live performing arts organization operators, museum operators, motion picture, as we talked about. But on this next slide here, one of the big requirements, and obviously more details will be coming out on this program. One of the requirements is that the entity be in operation as of February 29th of 2020. Okay, folks need to be aware, if you think that you are eligible for both the shuttered venue operator grant and a PPP loan program, those two programs are exclusive of one another. So wait for the guidance before you apply for the PPP loan program. Okay, if you applied for a first draw PPP loan over the first two rounds of funding, you would be eligible for a shuttered venue operators program. But if you apply for a new round of funding on the PPP loan program, that excludes you from the the SVO grant program. So be mindful. Let's wait for the guidance. If you feel that you're eligible and you fall in this category, you want to make sure that you crunch the numbers and make sure which one's going to be the most beneficial for you and your business. Okay. Let's not forget that the PPP loan program is a convertible grant, right? So it's a loan convertible to a grant. So it's no different than the shuttered venue operators grant program. So that's my 2 cents on that. And moving into the EDIL advance slide here. For folks who did apply last year for an EDIL advance, obviously, we ran out of funding on July 11th of 2020. So all $20 billion, were exhausted well, before, the initial deadline on the program, which was December 31st of 2020. So that deadline for the EDIL loan has been extended to December 31st of 2021. But the EDIL advance program is not going to work the same way it did the last time. So we've got enough applications on the pipeline, applications that were received last year, to exhaust all this new $20 billion. Okay, but the program and the legislation now requires us to provide additional targeted funding for eligible entities located in low-income communities. So that's a requirement under the CARES Act. Obviously, entities in low-income communities that received an EDIL advance are eligible to receive an amount that equals the difference from what they received initially, which was $1,000 per employee, right, up to $10,000. So if a small business received, let's say, $3,000 because they only had 3 employees, we're now going to go back, okay? If that business is located in a low-income community, we're going to make them whole for the difference of 10,000 to the 3,000 they received. Okay, so those businesses are going to receive that particular business, right? An additional $7,000 here. So guidance again is being developed. This is not the main priority for the SBA at the time being. So what I would say is guidance will be probably issued in the next 30 days. We are working on developing a mapping tool. So there's going to be an online map where you put in your business address and it tells you if you qualify as a low-income community-based business, okay? In addition, there is a requirement that the business has suffered at least a 30% economic loss, okay? So if you look at sales, comparing sales of 2020 to 2019, let's say, your business had, $500,000 in sales in 2019, 2020 has to show at least a 30% economic loss. So as measured by sales, that business with $500,000 in sales, we need to show sales of $350,000 or less to qualify. Okay, but more guidance is coming. Just wanted to share that update. I know there's lots of businesses who received an EDIL advance and only received $1,000 per employee when in fact they may have been eligible for the full $10,000. Okay, another clarification we got from the Economic Aid Act is that a borrower can receive both a PPP and an EDIL advance. So the CARES Act made it or was written such that you could get one or the other, whichever was the larger of the two grants. Under the Economic Aid Act, a business can receive both. So SBA will no longer deduct those EDIL advances from your PPP loan. Okay, so we'll talk more about that in just a second. With regards to the enhancements to the SBA lending program, so I mentioned earlier we got $2 billion for enhancements. Obviously, we're still crunching the numbers. We're working, with OMB and other agencies of the government to make sure that to see first and foremost how far that money can stretch. Some of the requirements for the enhancements on the SBA lending programs are statutory, so those are a must. Others are subject to funding availability. So, for example, here, the temporary increase on our 7A loan program from 75%, which is the current guarantee on a loan, to 90% is a statutory requirement. So all loans approved on or after December 27th of 2020, all the way through September 30th of 2021 are going to receive the higher guarantee. So new loans, right? But the fee reduction, we're still doing the math to see how much of a fee waiver can we put in place. In addition here, our 7A Express loan program goes from $350,000 limit on a temporary basis to $1 million, okay, through September 30th of 2021. Now the guarantee also is increased for loans under $350,000. So the guarantee goes from 50% up to 75%. Now, obviously, no business is looking for more debt. I know everybody perhaps on this call is interested in the grant programs available, including the PPP loan program. But there are lots of businesses out there that are doing okay. They're holding their own. They're looking to grow, and these programs, considering the environment we're in, the economic environment, these programs and this increased guarantees will make lenders more comfortable. Okay, get into the yes answer. So when the government guarantees such a large portion of the debt, lenders are a little more flexible and more willing to work with our borrowers. So we're hoping that the combination of the increased guarantees and some fee reductions, right, some enhancements on that front is going to help you and your business if you're in a position to either refinance existing debt or and have some savings there, some cost savings, or acquire some additional debt for working capital needs, expansions, whatever the case may be. Okay. Now, our 504 loan program, which is typically the program we have in place for fixed assets, so real estate and machinery and equipment, that is also getting quite a few enhancements with regards to the refinancing terms. And we're getting a brand new Express 504 loan program that goes up to $500,000. Okay, so just be on the lookout for that. More guidance will be forthcoming. I do want to encourage you all to sign up for our newsletter at our website. So the Massachusetts District Office website is www.sba.gov/MA for Massachusetts. At the bottom right-hand corner there of the screen, you can sign up for the newsletter. Obviously, you want to be in the know. You want to receive the information as fast as we get it and can disseminate it out. So if you haven't already signed up for our newsletter, good time to do so. Alrighty, so the debt relief program, we got some guidance on the 19th with regards to the debt relief program here. Some of this is statutory. Again, other parts of it are subject to funding availability. Okay, so not 100% certain if we're going to be able to do everything that was under the Consolidated Appropriations Act. But for the most part, existing borrowers that have SBA loans in regular servicing, they will receive 3 additional monthly payments of principal and interest starting on February 21st, okay, subject to a $9,000 a month maximum. Okay, underserved borrowers, and this is specifically stated on the new guidance published. Certain businesses that operate under specific NAICS codes. So a NAICS code is the North American Classification and Industrial Code that applies to your business and business entity. So some businesses will receive an additional 5 months of principal and interest payments and newly approved SBA loans, right? So these are brand new loans, Express 7A, and whatnot, will receive, if they're approved between February 1st and September 30th of 2021, they will receive 6 months of principal and interest payments made by the government. Okay, you don't need to do anything on this. Okay, so SBA will communicate with a lender of record, and we will notify them what loans are eligible. They tell us how much the payments are on a monthly basis. We will pay automatically up to $9,000 a month. So another big enhancement here, another clarification at the bottom of this slide, which I do want to point out, and we've got this in, obviously we've got this in clearance, and we will issue guidance to lenders as well, is the requirement for lenders not to issue a 1099, okay, for the debt relief payments that you received over the course of 2020. So if we made 6 months worth of principal and interest payments last year, you would have been subject to reporting those payments as income under the Economic Aid Act. That is no longer the case. Okay, so if you have received a 1099, you don't need to include it with your taxes. So if your lender issued a 1099 already, you don't have to include it with your taxes. If you haven't received one, you're not going to receive one. So CARES Act payments, Section 1112 CARES Act payments are not a taxable event for you and your business. All right, so folks, when people call us here at the office, when you email us here at the office, and I would highly encourage you, to do so. You can email us at our general mailbox, which is MA districtoffice@sba.gov. So MA for Massachusetts District Office at sba.gov. But before you do so, here's some resources that do have the latest and greatest information. So just wanted to share that with you all. First and foremost, our website. We've got 2, I think, well-written publications here. One is the Consolidated Interim Final Rule. So this Paycheck Protection Program amended by the Economic Aid Act, which was published on the 6th of January. And then for second draw loans, right, we've got a whole publication here. It's a 42-page document. I highly encourage you to read it, or have your accountants or have your advisors read it. Both of these are the foundation of this program, in a sense, right? The consolidated, IFR really spells out the rules of the program. Second draw IFR talks about specifics of this second draw funding. So highly recommend, that you go over that information first. But feel free to reach out to us here at the district office. Feel free to reach out to our resource partners as well. This program, just so you know, this program is being, administered by the SBA and the Treasury. So you may find the Treasury's website pretty useful, and I've got a link here. Now, I'm sure that you received a copy of the presentation. These links are live, okay? So make sure that you visit, this information and, consult with this published guidance, before you reach out to anyone. But if any questions, if further clarity is needed, we're here to help. Alrighty, so let's dive into the PPP loan program here. So a couple of major changes on eligibility that I do want to touch upon. So whereas before, 501c6s were not eligible to receive a PPP loan program, now those chambers of commerce, housing cooperatives, destination marketing organizations, and eligible news organizations will be eligible in addition to everyone else who was eligible during the first 2 rounds of funding. Okay, so we're talking here about first draw and second draw. So on the left-hand side, we've got entities that are eligible for a first and second draw PPP loan. With regards to the forgiveness, again, some great updates here for you all. First and foremost, we have the option for the borrowers to select a covered period that starts, with 8 weeks after the disbursement of the loan, and it's any time between 8 and 24 weeks. Whereas before it was either 8 weeks or 24 weeks. Now it can be, anytime in between. So 8 weeks is 56 days, 24 weeks is 168 days. If you want to apply on day 100, that's your covered period. Okay, so it's now spelled into legislation. With regards to the economic injury disaster loan advances, we talked a little bit about it. So SBA will no longer deduct EDIL advances from your PPP loan forgiveness, application and remittance to the lender. Okay, but if we, if you have already applied and the lender has already received a forgiveness payment on your PPP loan, okay, net of the EDIL advance. So if you were impacted, if you and your business were impacted by this policy we had in place prior, to the enactment of the Economic Aid Act, we will make a reconciliatory payment, okay, through your lender of record. So for all those amounts that we withheld, we're going to make you whole. We're going to submit the payment to the lender. If you have a loan outstanding with them, that payment will be applied to the loan. If, for example, you have paid that remaining balance in full, then you will receive a reimbursement. Not only is the SBA going to pay the outstanding balance that we withheld, but the interest accrued up until the bank receives, or bank or credit union receives payment. So just be mindful of that, work with your lender. I cannot stress enough how important it is for you to build those relationships with our lending partners and your lenders. So it says under development here, no longer the case. We do have the simplified forgiveness application for loans up to $150,000. It's out. I've got a link later in this presentation. So we'll talk about it a little later in the program as well. So this is something that I already mentioned. Housing cooperatives, eligible 501c6s, eligible destination marketing organizations. So a destination marketing organization is not the same as a multi-level marketing organization. A multi-level marketing organization is not an eligible entity. So that would be, some sort of a pyramid scheme, right? Those are not the same as a destination marketing organizations. But the catch here is that those organizations have no more than 300 employees. So that goes for chambers of commerce, housing cooperatives, and so on and so forth. In addition here, we've got news organizations and nonprofit public broadcasting entities, okay, that operate under certain NAICS codes that are listed here on the slide, that have no more than 500 employees. That's another eligibility, addition here and enhancement. So moreover, on this next slide, we've got some enhancements to what can PPP loan funds be used for. So these enhancements, are not just for this new round of funding. If you received a loan during spring and summer of 2020, these enhancements will apply to you when it comes to forgiveness, assuming you have not applied for forgiveness. Okay, so in addition to payroll costs, okay, you can now include costs related to, group healthcare, life, disability, vision, right? And so on and so forth. So all premiums paid by the employer would be eligible for forgiveness. With regards to the non-payroll covered expenses, okay, some great enhancements here. So first and foremost, if your business had to adapt to, the regulations that were in place due to state, federal government, due to the pandemic, any type of business software, cloud computing service, product or service delivery, right? Processing, payment, or tracking of payroll expenses, human resources, sales and billing functions, right? Accounting or tracking of supplies, inventory records, and expenses. It's now a covered, operation expenditure. You can utilize, okay, PPP loan funds not to exceed 40% of the loan for that purpose. Okay, so this is still the requirement is that you have 60% payroll, 40% non-payroll covered expenses. In addition, PP&E, covered worker protection expenditures. All of those are, I know many of you have had to, expense lots of funds for that regard, or with, to protect your employees. So that is all a covered expense under the PPP loan program here. Keep in mind, again, it's only for the 40% difference from, what's required to be used on payroll expenses. All right, so with regards to the first draw PPP loan, let's, another reminder here, right? This is only available to those businesses that did not receive, I want to stress, that did not receive a loan, a PPP loan over, in the course of spring and summer of 2020. But, an eligible entity, that did not apply before August 8th, right, that has 500 or fewer employees would be eligible for a new first draw PPP loan. Okay, so there is an exception for businesses operating under NAICS code 72. So that is one of our hardest hit industries, so accommodation and food services sector. So the exemption here is that, for a first draw PPP loan, they have no more than 500 employees per location. Okay, news organizations with no more than 500 employees per physical location and housing cooperatives are also eligible, right, for a first draw PPP loan. And in addition, right, 501c6 organizations with no more than 300 employees also eligible. We talked about this, but just want to reiterate the point. Again, we're talking first draw PPP loan eligibility. As far as the loan terms, it's pretty much the same as the first two rounds of PPP funding. So these are non-recourse loans, no personal guarantee requirements, no collateral requirements, 100% guarantee to the lender, okay? The interest rate is slightly different this time around. So although it's 1%, it's non-compounding and non-adjustable. All loans during this round of funding, whether first draw or second draw, qualify for a 5-year maturity. They can only be processed by your lender of record, or I should say by a participating PPP lender. And, the loan amount, again, for all businesses except NAICS code 72 is 2.5 times the average monthly payroll. Now, the requirement continues to be that, employee and compensation levels are maintained, okay? That the loan proceeds are spent on, payroll costs and other non-payroll expenses, eligible non-payroll expenses, and that at least 60% of the loan proceeds are spent on payroll costs. So similar to the first two rounds of funding, a borrower needs to spend at least 60% of the proceeds, at least, right? But they can spend all of it in payroll costs. Now, that's not a hard cliff, so what I would say is a loan of $100,000, if you want a second draw, let's say PPP loan of $100,000, If you have only $54,000 on payroll expenses at the end of the 24-week covered period, you would still be eligible for some forgiveness, but you would not receive 100% forgiveness. Okay, so the way to do the math there would be to take the $54,000 of payroll expenses, you divide it by 60%, which is the requirement. So you divide it by 60%. It gives you a total of $90,000 in eligible forgiveness. Okay, assuming that the difference between the $54,000 payroll costs and $90,000, which is $36,000, is for eligible, non-payroll costs, okay, that we talked about earlier. So again, I know with the extended covered period of up to 24 weeks, that will not be an issue for many of your businesses to show, that you've spent at least 60% on payroll costs. But just wanted to make that point that even if that's not the case, that doesn't mean that you're not eligible for forgiveness at all. All righty, so additional details here. As the legislation reads, this round of funding is only going to be available through March 31st of 2021. Okay, now we do feel that the almost $285 billion should last us, through that time window, but timing is everything. So if you think you're eligible, if you meet the eligibility criteria here, and you did not apply for a first draw PPP loan, by all means, go right ahead and apply as soon as you can. Second draw, PPP loan applicants, same thing, apply as soon as you can. But we do feel that there is sufficient funding for this round of PPP program. So under a very narrow interpretation of the legislation, okay, some borrowers, existing PPP borrowers that received a loan, that did not receive a loan forgiveness before the passage of the legislation on December 27th, have the option to either reapply for a first draw PPP loan, right, if they returned all of the first draw PPP loan funds, or in some very narrow circumstances, right, they can request a modification of that first draw PPP loan. So we have a procedural notice out to our lenders that speaks to exactly what, what's eligible, what qualifies, and whatnot. If you have any questions, again, email us at madistrictoffice@sba.gov. Okay. So loan terms, for those increases will basically be, the same as what they were during spring and summer, not what they are currently. Okay. So we're talking about increases and reinstatements here. So Greg told me that the majority of the folks who signed up for this webinar, they expressed an interest on the second draw PPP loan. So, the next 20 minutes are dedicated to this particular program here. So first and foremost, to be eligible, right, for a second draw PPP loan, you have to have been eligible and received a PPP first draw loan. Okay, so whether you applied in 2020 or 2021 for a first draw PPP loan, that does not matter. You would still be eligible for a second draw PPP loan, right? If you have or will use the full loan amount for eligible expenses before the second draw PPP loan is dispersed. That's a certification you need to make on the new application for a second draw PPP loan. Okay, across the board, okay, second draw PPP loan applicants cannot have more than 300 employees, with the exception, right, of those NAICS codes mentioned earlier that can have 300 employees per location. That's the only exception though. Across the board, all borrowers, all applicants and affiliates cannot have more than 300 employees unless they fall under that exception. So most importantly here, a borrower needs to demonstrate an economic injury as reflected through their gross receipts, okay? of at least 25% reduction in gross sales between comparable quarters of 2019 and 2020. So you cannot compare second quarter of 2019 with the fourth quarter of 2020. You can compare second quarter of 19 with the second quarter of 2020. You can compare the entire 2019 calendar year with the 2020 calendar year. Okay. You also, if you were not in business, the full 2019, there is flexibility as to what you can use. As long as you were in operation on February 15th of 2020, you should be eligible, okay, for a first draw and thereafter a second draw if you meet the requirements, right? And you could use the first quarter of 2020 in those instances as the comparison basis to any other quarter in 2020. Okay, so this is all guidance that's well spelled in those IFRs, that published guidance we have available for you. But again, I'm sure we're going to have some questions later on this topic. All right, so again, timeline, March 31st of 2021 for second draw PPP loans. For all borrowers, right, for all borrowers except those operating in NAICS Code 72, the accommodation and food services industry. The maximum loan amount for a second draw PPP loan is 2.5 times your average monthly payroll for either 2019 or 2020, whichever works best for your business, okay? Up to $2 million maximum. Big difference here. A first draw PPP loan was up to $10 million. Second draw PPP loan up to $2 million. That's why we feel the funding is gonna last a little longer this time around, because all these loans are capped at $2 million, okay? And for those who qualify, of course, for up to that. Now, for borrowers in the accommodation and food services sector, okay, that reflect the NAICS codes starting with 72 on their most recently filed tax returns. So I just want to make that clear distinction here. Those borrowers need to reflect NAICS Code 72 on their most recently filed tax returns to qualify for 3.5 times the average monthly payroll for either 2019 or 2020, okay, capped at $2 million. So a business that operated, on a different NAICS code in 2019, but in 2020 they pivoted and, they became a delivery only, let's say, food service, a restaurant. And they file their 2020 tax returns under a NAICS code 72, okay? As long as they have that verification, they should be eligible, okay? And they need to use the 2020 payroll costs, right? Of the year that they became a Sector 72 industry. All righty, so additionally, right, as far as application and forgiveness. So a PPP second draw loan application is a updated form. It's form 2483 SD. So SD stands for second draw. Some added certifications there, including the revenue reduction and a few other added certifications on the document. But I would highly encourage you to read through the instructions of this form, SBA form 2483 SD. There is lots of useful information on the instructions, including calculating payroll costs, right, depending on when the business was in operation. In addition, we have provided guidance with regards to calculating loan amounts. So we have publications on our website. Again, you go to sba.gov/PPP for all that information. So PPP for Paycheck Protection Program, sba.gov/PPP. Now, calculating those payroll costs, right, for the second draw PPP loan could be either, calendar year 2019 or the 12-month period prior to when the loan is made. So theoretically, right, for a loan made now, it would be 2020. So keep in mind the legislation is clear on calendar year, okay? It's also clear on quarter, the definition of a quarter. So if your fiscal quarter does not correspond with a calendar quarter, you cannot use your fiscal quarter. You have to use the calendar quarter. Okay, so this is, explicitly stated in statute. Obviously, I mentioned there are benefits to going back to the same lender of record for a second draw PPP loan, but you don't have to. Okay, just want to make that clear. There's no reason for a borrower to go to the same lender unless that's how you want to go about it. It's your discretion. We have made it available that you can go to any lender, any participating PPP lender, but obviously there are benefits to working with the same institution. Excuse me. So the simplified forgiveness process for loans under $150,000 was a requirement of the Economic Aid Act. The agency published, the forgiveness application on the 19th, so a couple of days ago. And obviously, one of the major benefits here is for loans up to $150,000, okay? Borrowers do not need to provide to lenders documentation with regards to prove the revenue reduction of 25% or more, okay, at the time of the application for the loan, okay, a second draw PPP loan. You do have to certify, however, on the application that you did experience a 25% reduction, and you must provide that documentation at time of loan forgiveness. So even for loans under $150,000, although that information is not required at the time of application, you have to still certify, and you still have to provide the documentation at time of loan forgiveness. All right, so let me elaborate a little further on that, because this has been a frequently asked question here at the office. So as stated here on the slide, an eligible borrower that received a loan of $150,000 or less, okay, should use SBA Form 3508S, which is the updated simplified form, okay, and shall not, it says, at the time of its application for loan forgiveness, be required to submit any application or documentation, okay, in addition to the certification. So we're talking forgiveness now, not application, okay? So keep in mind, although, through the streamlined forgiveness, you're not required to submit any documentation to the lender. So this is a big difference from the previous forgiveness applications, which you had to provide documentation for payroll and, FTEs, maintaining FTEs and wages and salary levels. Now you do not need to provide this documentation to the lender. However, you still have to retain it on your file for 6 years, okay? The fact that you don't have to provide the documentation to the lender doesn't mean that you don't have to have it. Okay, so just want to make that clear. Now, with regards to a borrower that received a second draw loan of $150,000 or less, okay, using Form 3508S, which is a simplified, streamlined forgiveness application. Although you were not required to submit, any documentation with regards to the reduction in gross sales, right, at the time of the application for the loan, at time of forgiveness, you must provide, that documentation, right, to your lender. So as I mentioned on the previous slide, the lender can make a second draw PPP loan based on your certification. They can rely on your certification to make the loan as long as you state and certify that you have experienced a greater than 25% reduction in gross sales in 2020 as compared to 2019. Okay, no other documentation would be required. However, that's only at time of origination of the loan. At time, and for loans less than $150,000, at time of loan forgiveness for a second draw loan of $150,000 or less, that documentation is a must, and it needs to be submitted to your lender of record, okay, for them to render a decision back to the SBA on this. All right, so a couple of very important, exemptions here for this, for the program, for both, the first two rounds and this current round. So talking about forgiveness at this point here, a couple of things that the SBA and the Treasury together, right, in their rulemaking authority came up with. So first and foremost, we're continuing the exemption provided in the first two rounds of funding, right, with respect to offers from the employer, right, the borrower in this case, to rehire. Okay, so if you make a good faith offer to rehire an individual that was let go, right, and they do not accept, that's not going to go against your FTE reduction count. Okay, that continues to be the case. Same thing goes, for FTE employee reductions, right? When in good faith, right, those individuals were fired for cause. So if you've got somebody that was let go for cause, that FTE reduction is not going to count as a reduction for you and your business. Okay, now if you look at one of the other requirements here is basically the FTE reduction penalty here when you eliminate, or better said, this is the way it's written, it's a little confusing, but borrowers who received a PPP loan before August 8th, the safe harbor date was December 31st of 2020. Okay, if you had reduced your FTE workforce and during the covered period, however, restored it by the safe harbor date of December 31st of 2020, then you would be exempt from the reduction on FTEs. Okay, so that continues to be the case. And for a loan that was made after December 27th, right, which would be this round of funding, that safe harbor date is the last day of your loan's covered period. Okay, so that's a better way to explain it. So again, we're talking the safe harbor day with regards to the exemption for full-time equivalent reductions. Okay, now in addition here, you do remember that Form 3508S, right, the application for forgiveness, was available before the Economic Aid Act, but was only available for loans up to $50,000. Okay, now it's available for loans up to $150,000. However, the exemption for the FTE reduction and the exemption for the employee salary and wage reduction is only and continues to be the case for loans up to $50,000, not up to $150,000. So to clarify that, although you are eligible, if you received a loan of $150,000 or less, you're eligible to apply for the streamlined forgiveness process. Okay, basically submitting no documentation to the lender. You still are required to hold that documentation on file, and you are only excluded from the FTE reduction and the wage and salary wage reduction penalty if your loan was for $50,000 or less. Okay, so that's one point that I did want to clarify here, and I'm sure we're going to have questions about that. A couple of things here. This is one of the last slides I've got, so we're going to get to the Q&A session in just a little bit. But a couple of things that are worth mentioning here. So first and foremost, there is no upfront guarantee fees payable to the SBA by the borrower. So again, this PPP program is a loan that's convertible to a grant. It has the potential to be 100% forgiven. No fees that you have to pay to your lender, or anyone for that matter, right? So make sure that that no one's promising you a loan in exchange of a fee. This is a program that we are paying the bank, the government, the taxpayers are paying the banks to process these loans. Okay, we pay our lenders a processing fee. You don't have to pay a penny for obtaining a loan. the lenders don't have to pay us any service fees, no ongoing guarantee fees on these loans either. You know, contrary to that, to the normal programs, we pay the lenders a processing fee for putting these loans, you know, together, for packaging these loans, for making this funding available to you all. Okay. Agents, if you are using an agent, if you're working with an advisor who is charging you a fee, no PPP loan proceeds should be used for that purpose. It's not an eligible use of loan proceeds. And your lender is only responsible for paying fees to an agent for services that they have contracted with. So if you have an advisor that you're working with and you want them to get paid for the work that they're doing and helping you with, you have to tell the lender upfront that this is an agent I'm using. Here's the name, you know, here's the contact. They're helping me with this package, and they should be paid, you know, for services rendered. Okay. At the bottom of the slide is the maximum that an agent can collect based on the size, you know, of the loan. Okay. So just something I wanted to share with you all. I know, you know, this has been, you know, a point of contention for many of our lenders and borrowers in the first two rounds of funding, not necessarily the case now. So updated forms and guidance. This is my last slide before we open it up to questions, but want to remind you that for first draw PPP loans, we've got a you know, a borrower application form. So first draw uses form 2483. This is a live link. Lenders use a lender certification document, which is form 2484. For a second draw PPP loan, you have to use form 2483 SD. Okay, visit this link. There's a lot of useful information here. And obviously lenders have to also use their certification form. So although lenders can rely on borrower certification, they still have to do their due diligence, and they still have to, you know, do their own certifications. With regards to forgiveness, this IFR, which talks about, you know, forgiveness updates, right, as amended by the Economic Aid Act, was just released, you know, a couple of days ago. So it's a 62-page document, very useful. It really, you know, it really explains it well, the process, and so on and so forth. Share it with your advisors, share it with your CPAs, you know, attorneys, people on staff who are responsible for filling out, you know, this forgiveness applications. But if your loan is for $150,000 or less, you could use, you know, the simplified form, forgiveness application form 3508. Okay, or you could use whichever is applicable, 3508 EZ or 3508 for loans greater than $150,000. All righty. So the last, you know, the last bullet here, it's really, you know, this is the disclosure, which is form 3508D, not applicable for everyone. Okay. So this is not something that, although it was released the same day, most people, unless they're an employee of the executive branch, it's not going to be applicable to you. All right. But with that said, I'm going to open it up to questions. I know I've talked for, you know, a straight hour here, and it's a lot of information coming your way, but I'm hoping, you know, in this next half hour, we'll be able to address some of your questions. So Greg, let's open it up to questions, and you know, let me know what do you have on the chat box.
Yeah, thank you so much. Wow, a lot of information in there. I did try to filter out some of the questions that you've answered, but we'll get to as many as we can. And also want to say up front that before we began, Eli and I had a conversation about doing a separate webinar on forgiveness. There are a number of forgiveness questions here. I'll get to a couple of them, but then we do plan to do a separate program on that. So, and the first one is about forgiveness, Eli. When will the SBA review and forgive PPP loans, which were submitted in July for forgiveness? Bank approved in August, forward to the SBA. So question about timing on forgiveness.
Okay, that's a very good question, actually. And the timeline we have published, okay, is a timeline that for the most part, you know, most, you know, borrowers that applied for forgiveness have fallen within. So once you submit an application for forgiveness, no matter which form it is, your lender of record has 60 days from the date that they receive a completed application to render their decision to the SBA. So they review the submitted documentation, application, paperwork, they render a decision to us within 60 days, okay? From that 60-day window, we have a, basically, it's a goal that we have assigned ourselves as an agency of 90 days, but that is not statutory. So I want to clarify that with our, with our participants today. So it's not a statutory requirement that we submit payment within 90 days, but that's the goal, that's the objective. And about 95% of all submissions, and we have processed well over 1.4 million applications for forgiveness so far, okay, fall within 45 days or less. So we have made borrowers whole through their lenders within 45 days or less. But there are some loans that are taken over 90 days. For about 99% of all loans are getting paid within 90 days. But there are some that are taken over 90 days. And reason being is certain loans may have been flagged for, for review by the SBA. They may have incorrect information. Our public record searches may have indicated, bankruptcies or criminal records, some sort of eligibility issue. So until the review is complete, and this is something that I should probably mention with regards to the second draw loans. So if your first draw PPP loan is under review by the SBA, you cannot obtain a second draw PPP loan. Okay, so for those loans that are in review currently, that have perhaps, exceeded the 90-day window with the SBA, we are working as fast as we can to clear those, because those are creating the bottleneck for our second draw PPP applicants. Okay, but to answer the question once again, Greg, it's only a handful, a small percentage of loans that are taken greater than 90 days. The majority of them, 90%, are getting paid within 45 days, and 99% of submissions are getting paid within the 90-day window that we have assigned ourselves.
And how long does someone who received the first loan in 2020 have to apply for forgiveness? And what about the banks? Some banks are recommending waiting. Some banks say go forward. What's the best advice there?
So if your loan is for $150,000 or less, okay, there is no reason to wait any longer. The guidance is out with regards to the streamlined application process. You can use Form 3508S, okay, to submit for forgiveness. I would say, for any loan, there's no reason to wait. But borrowers do have up to 10 months from the date, the end date of their covered period, right? So if, let's say, your covered period is 24 weeks and you received a loan on June of 2020, that 24-week window has lapsed. You've got 10 months after, the end of the covered period to apply for forgiveness. Okay, the one requirement is, although there is no requirement, I should say, that borrowers have applied for forgiveness to receive a second draw loan. So you don't have to have applied for forgiveness to be eligible and apply for a second draw loan. You do need to have used all the funds on the first draw PPP loan before you can apply for before you can disperse on the second draw PPP loan.
So you can apply, but you can't disperse, right? And is that also
you can apply? Yes, go ahead, Greg.
Is that also the same case for if you haven't received your forgiveness? You can still get your application in for your next draw, right?
That is correct. So to have applied for forgiveness on the first draw PPP loan is not a requirement for obtaining a second draw PPP loan.
Right.
What do you need to certify to, and what the lender needs to make sure of, is that you have used the funds on the first draw PPP loan before they can disperse on the second draw PPP loan.
Great. A question here. One of the certifications on the application form says current economic uncertainty makes this loan request necessary to support ongoing operations of the applicant. Our accountant said this means that the applicant absolutely needs the loan to survive, i.e. will go bankrupt without it. Do you agree with that?
That is subject to interpretation. The CPA's interpretation in this case may not be how I would read or answer the question. So it doesn't mean that you absolutely need it or else you're going to go bankrupt. It means that the business is has experienced economic injury, that without the loan you wouldn't be able to operate and recover. So that's the way that I interpret it. Bankruptcy, that's a bit of a stretch.
Right. Okay. Thank you. If we received an earlier EIDL loan but no advance, can we apply for an EIDL advance now?
So there is no process in place for new EIDL advance applications. Okay. Individuals that applied after July 11th, which was the date we ran out of funds for the EIDL advances, are in the queue to receive, an EIDL advance if they are eligible, okay, under the legislation. So those folks located in low-income communities are going to get priority. Then those, who have applied in the order the applications were received would be in the queue for any remaining funds.
I've seen a variation of this one a couple of times, and I know you've talked about it. If I understand correctly, covered period can now be any 8-week period during the 24 weeks after disbursement. Is that only for round 2, or does it pertain to forgiveness on round 1?
It pertains to all PPP loans, no matter when they were funded. So covered period is, anytime between 8 weeks to 24 weeks. Okay, so a covered period could be 75 days. A covered period could be 100 days, 120 days, all the way up to 24 weeks or 168 days, no matter when the loan was approved.
Is workers' comp expense allowed to be covered under the new enhancements as an eligible expense?
Workman's comp.
Right.
I got to look it up. I can't think off the top of my head. I got to look it up. I'm sorry. That's not a question I've had to answer.
I've never seen
We'll definitely follow up with the borrower.
There you go. The loan amount is determined exclusively using payroll costs, but can be used for 40% of other expenses, correct? These non-payroll expenses are not used to calculate the requested loan amount, correct?
That is correct. Okay. So for all businesses, the average, loan amount is 2.5 times the average monthly payroll. Okay. So borrowers have anywhere between 8 weeks to 24 weeks to use up the funds. They could use it for 100% payroll if they choose, but if they choose the shorter 8-week window, then for payroll, then the difference could be the eligible non-payroll covered expenses.
And another one about covered expenses are payroll taxes and eligible payroll cost.
That's correct.
Okay. For sole proprietors, how is the loan amount calculated since there is no formal payroll?
So similar to what we had in the first 2 rounds of the PPP program, we have now updated a document on our website called How to Calculate Loan Amounts. So if you go to sba.gov/PPP, that's all published there. Sole proprietors will have to go by the net income on their Schedule C. So if you file a Schedule C, I believe it's line item 31, you look at the net profit. If it's a negative number, you're not eligible for a PPP loan still. If it's a positive number and less, you have to take that amount divided by 12, and that's subject to a maximum of $100,000. You take that amount divided by 12 times 2.5. That is your loan amount, maximum loan amount. and assuming you don't have any employees. If you've got employees, you got to add employees to based on the 941 or any other payroll records to the equation.
Yeah, so this is a kind of a specific question. I'm just going to make it a little more general, but we have the owner of a beloved business in Newton who was approved for an SBA loan last year, but could not actually get it because he is not yet a citizen permanent resident. Help us understand where non-resident citizenship falls into the rules for applying for PPP, since there are obviously many immigrant-owned businesses.
So PPP loans are only available to businesses and employees that are residents of the U.S., right? So citizens, permanent, lawful permanent residents, and so on and so forth. If you've got an individual who was an owner who's not a U.S. citizen, okay, and the legislation specifically speaks to their place of residence, right? So if you've got an individual who would not have been eligible to include their own compensation replacement, that would continue to be the case, okay? But they can include the compensation, the wages and payroll of their US-based employees.
Thank you. I think you've covered this one, but let me ask it again. Does it need to be a covered calendar quarter for comparison or any 3 consecutive months?
It has to be a calendar quarter. We did get clarity on that. The legislation speaks only to a calendar year. And obviously, even if your fiscal quarter is different or fiscal year is different than the calendar quarter and year, you have to go by, the calendar quarters.
Okay. When I applied for first PPP, I had 5 employees. 1 employee resigned, joined another company, advertised position, could not fill that position with suitable candidates. Will that affect forgiveness for my first PPP loan?
It sounds like it falls under one of those exemptions that we mentioned earlier. So what I would say is, to this individual, just go back to the to Form 3508S if your loan was for less than $150,000. If it's greater than $150,000, use Form 3508EZ or 3508 the standard form, and you will see in there, in the instructions, these exemptions that I'm referencing.
Okay, and one more question here about the quarters. So someone's asking essentially, Q1 was not fully during the pandemic. Does it matter? Can they still count Q1 of 2020 for comparison purposes to 2019?
So if I understand the question correctly, you have to, for a business that was not operational in 2019, would be able to use Q1 of 2020 as the basis of comparison with any other quarter in 2020.
Okay, but can they also use 2020 and compare it to 2019 Q1s?
Yes, so if you're choosing Q1 of 2020, you can compare it to Q1 of 2019.
I think
only.
that's what the question was, yeah, okay. Can we apply for a higher loan upgrade and pay the 1% interest rate?
So loan increases are allowed for a very specific, very narrow interpretation of the legislation. So we have a procedural notice published on our website. It is a procedural notice 5000-276, if I'm not mistaken, that speaks to loan increases. It's a lengthy document, but it really covers in great detail what loans are eligible, what instances would be eligible. And it's not referencing any errors made on the part of the lender or the borrower. So this would be specifically loans that you were eligible for more money than what you calculated on the first 2 rounds of funding, before August 8th. You applied for a lesser amount, and now you know that you are eligible for more, so you go back and you ask for that full amount. That's the gist of it. So you wouldn't be, any good old reason.
I admire the way you're rapidly getting through these. Did I correctly understand that we can be reimbursed for the EIDL advance, which we paid when our PPP was forgiven?
That is correct. So we are currently working on a reconciliation payment, which will be submitted to the lender of record for any amounts withheld during the forgiveness up until December 27th. So effective December 27th, any payments were sent into lenders on forgiveness. We're no longer deducting the EIDL advance. Okay, and that's going to be the case going forward. For any payments we withheld, any borrowers affected by the policy in place prior to December 27th, we are going to submit a reconciliatory payment to the lender of record for the amount withheld plus accrued interest.
Very good. I received a PPP for under 13K in May 2020. Which forgiveness form do I use?
If the loan is less than $150,000, then you would use Form 3508S for simple. And loans under $50,000 only need to basically are out of the three requirements, one being 60% payroll cost, one being maintaining FTE employees, and the other being maintaining salary and wages. You're only responsible to maintain records for payroll because your loan is for less than $50,000. Okay, you are excluded from the FTE and wage and salary level reduction.
How do you know if your loan is under review from the SBA?
Your lender of record would have been notified. So we are utilizing a platform. This is probably, if we have any lenders on the line, I'm sure they are well familiar with this. We are using a third-party interface to our mainframe. It's called the Paycheck Protection Program platform. And through the platform, there is an inbox feature that lenders can access and see basically the back and forth correspondence with the SBA. We've got different teams working on this platform. As recently as Tuesday, we had to assign 2 of our staff, and we are a small office here in Massachusetts, although we're considered one of the larger ones in the nation, right? We assigned 2 people, and every office in the country assigned 2 of their staff to the service center to work on these issues. So we've got an additional, staff surge with the centers that are dedicated to working on, this bottlenecks created from the forgiveness or from, loans in review, from holds. There's an array of, delays that could prevent borrowers from receiving a second draw PPP loan, and we're trying to clear up that bottleneck as fast as we can. You're muted.
Can a second draw PPP be used for operational costs, such as a new air purifier, needed PPE?
Yes. So if that was, obviously up to 40% of the loan proceeds, right? If that was needed as part of having to adjust to a new environment, then yes, that would be operational costs that are included with the new legislation.
I mean, it's not just second draw, you can use it for your first draw, correct now?
That is correct. That is correct. And if you have not submitted for forgiveness on that first draw loan, you can include it in the forgiveness application.
Has the definition of payroll for Schedule C filers changed since the first PPP loan?
It did not change, no. So for a sole proprietor, it is more, payroll is owner's compensation replacement. So only, there were only enhancements, nothing, from the way the CARES Act read changed. So we only added more to it.
Great. And can a business reapply for an SBA loan if they had been rejected before and are outside the deadline for reconsideration?
So the way we understand the EDIL program is that the borrower has 6 months to apply for a reconsideration after a decision is made. So if you have not applied within 6 months, you can still submit a reconsideration request. The golden rule of thumb is that even after the reconsideration is decisioned, if that is not a favorable decision, right, you can appeal it within 30 days.
How are you notified if a loan is forgiven?
So there is no official notification from the SBA to the borrower. This isn't a question I've received a couple of times directly from small business owners. So the only notification we will provide is to the lender of record. So we are, you got to think of the structure of the PPP loan program. PPP loans are private loans by a specific participating PPP lender, okay, that bear a guarantee from the SBA. So your contractual agreement is not with the SBA, your contractual agreement is with a lender of record. So they have extended you credit via a private note that is guaranteed by the SBA. And that is, it's part of the reason this program was such a success, because we were able to get, private lenders, private funds in the first 2 rounds of funding, well over $525 billion into the small businesses' balance sheets, right? We only provided a guarantee, and we're providing a payment at time of loan forgiveness for those qualified expenses. So because the contractual agreement through the note on the PPP loan is with a lender, your lender notifies you that that contractual agreement has been satisfied once we pay the lender off. Okay, so that's why we submit the payment to the lender, right? And then they apply it towards the balance on the note. And if it's fully satisfied, you're released from the obligation. If there's a remaining balance, they notify you, here's what the SBA paid, here's what you owe on this loan balance.
I received my PPP funding on May 2nd, 2020, over 150K. What's my drop dead applying for forgiveness?
So you've got 24 weeks from that date. So I cannot do the math that fast in my head, but that's roughly 6 months. So that takes you to around, Thanksgiving of 2020. Then you've got 10 additional months to apply for forgiveness from, let's say November 20th. That's ballpark, math in my head. So you have 10 months from that date to apply for forgiveness. If you do not apply for forgiveness, you have to start making payments on that loan. Okay, so there's no longer a deferment on those PPP loans once you're past 10 months after the end of the covered period.
Another second draw question. Besides the 25% comparison of 2 quarters, are there any other required attestations to financial hardship?
Same, so the same certification that was mentioned earlier that, this loan is a necessity. The current, economic conditions make it a necessity for the business operations. You have to certify that you have or will use the loan proceeds of the first PPP loan for eligible covered expenses as well. And obviously, you cannot have more than 300 employees combined with any affiliates.
My nonprofit organization experienced a reduction in revenue in each quarter of 2020 relative to the same quarter of 2019. However, in only 1 quarter was a reduction greater than 25%. Is the amount of the second draw loan for which you can apply limited to the reduction of revenue in that 1 quarter?
No, it's not. That is the qualifying criteria. However, payroll costs can be, calculated based on 2019 or 2020 data.
Okay, maybe time for maybe 2 more. You're answering them pretty quickly. Can you define payroll costs for insertion on the second round application?
So I forget what slide it was, but payroll costs, obviously on the IFR are a length of 3 pages. So I cannot define it in a quick sentence, but obviously you're looking at compensation and wages. You're looking at group health insurance, group life insurance, vision benefits, so on and so forth, paid by the employer. So you could include hazard pay. You could include tips and commission, all that good stuff. But for the guidance we have published on our website truly is self-explanatory, and it really does a great job at explaining exactly what's eligible and what's not.
Thank you. And I just have a couple questions myself that are more personal. But how many of these do you do every week? It's amazing what you do and the amount of information.
We are a staff of 13 people. As I mentioned, we assigned 2 of our staff to the service center. So there's 11 of us. Each one of us does at least 3 a week. So we're working with our partners as best we can. Again, at the end of the day, information is power. We want folks to be fully aware of what's available. As I mentioned earlier to you, Greg, this program was a godsend for many of our small businesses. I know firsthand of many small businesses here in the Commonwealth that are hurting and desperately need the funds. So we're just glad we're here to help. Again, we're your taxpayer dollars at work. So feel free to reach out to us. Again, Greg, I appreciate the opportunity here and the partnership we've got with the Chamber.
Well, we're so grateful to you and your patience and your time, and look forward to having you back to talk more specifically about forgiveness. We really appreciate that. And thanks to everybody who participated today. We will send out the slides and a video from today a little later this afternoon for anybody who wants to go over it or might have missed part of it. Thank you again, Eli, and everybody be safe and have a good day.
All right. Take care, everyone. Have a nice weekend.
Yep.